The government is all up in our business yet again. This time trying to ban everyone's favorite new asset class where a bunch of us have actually moved our money to. So in this video, we're going to break down what the government is doing it, why they're doing it, and of course, how to protect your money. Because that's what we do at Fallible. We watch the downside and manage risk so that we could keep our money safe while still growing it. So what exactly is going on here? Well, Big J is our president now, and of course, he brought some friends along with him, including a ghost from our past, Janet Yellen. Now, you may remember her as the new Ben Bernanke or the old Jerome Powell, but I remember her from my dreams where her head would be floating around amongst a million of these little Goombas, and I'd just be jumping on all of them, Mario style, while just eating some fettuccine Alfredo. So yes, I'm very excited to get these Yellen dreams again, because while she used to be the one who ran our money printer as the Federal Reserve Chair, now Biden is appointing her as the Treasury Secretary in this new administration. And I think she does indeed miss her dollar printer, because in her confirmation to become the Treasury Secretary, she took a not so friendly stance towards everyone's favorite new asset class. And what is that asset? Well, if you haven't guessed it already, it is Bitcoin, and really cryptocurrencies in general, which is obviously not good for an asset and whoever's holding it if the Treasury Secretary has a target on it. So let's see what she said about it. So the Senate Finance Committee, that's the one who runs the confirmation hearing, they're asking Yellen about the use of cryptocurrency by terrorists and other criminals. And she said cryptocurrencies are a particular concern. I think many are used, at least in a transaction sense, mainly for illicit financing. Mainly for illicit financing. That's not good if that's how she views cryptocurrencies versus all the other benefits that come from them. She goes on to say that they want to examine ways in which we can curtail their use and make sure that money laundering doesn't occur through those channels. And she's not the only one saying this either. I know we're talking about the US government right now, but this is happening across the world as well, such as the European Central Bank president. She said Bitcoin has been used for some totally reprehensible money laundering activity. And there's a lot of people that think this way, including Warren Buffett, everyone's favorite grandpa. He said Bitcoin has been used to move around a fair amount of money illegally. He said investors should go short suitcases because criminals no longer need them to carry cash. And that's Buffett nowadays, just the peanut gallery coming in with quips and jokes. Well, you're probably gonna have to short some suitcases. Gotta love the buff. So yes, obviously Bitcoin and cryptocurrencies, because of their anonymous nature, they can be used for a lot of illegal activity, including money laundering. Now, we could argue that the benefits of these currencies, the same properties that make them dangerous, make them way more useful, and that the benefits outweigh the drawbacks, but the drawbacks are what the government is focused on. See, Yellen thinks it's mainly used for illicit financing. Not good. So what does this actually mean for cryptocurrencies like Bitcoin then? Well, what it means is that more government regulation is coming, which obviously goes against the whole decentralized nature of cryptocurrencies. So anyone who believes in that crypto dream, they hate what's going on right now. So the regulation was actually already happening during the Trump administration. He had the Financial Crimes Enforcement Network, and that team was proposing a new set of rules to clamp down on cryptocurrencies. And see what's happening here when they come to regulate Bitcoin, they're actually going after the exchanges, the ones that help users trade between dollars and cryptocurrencies. They're doing that instead of focusing on the networks itself. So going back to this Financial Crimes Enforcement Network, under the new rules that they propose, cryptocurrency-based exchanges would need to file transaction reports with the FinCEN, which is Financial Crimes Enforcement Network, anytime a customer made a cryptocurrency transaction worth more than $10,000. So this basically mirrors rules that we have right now for conventional banks to report the same thing. Any withdrawals or deposits of more than $10,000 are reported. So again, reining in the crypto markets, making them more like banks. They also want to impose new record-keeping requirements for transactions involving users who manage their own private keys. These are what they call unhosted wallets. So what they want is basically if anyone sends $3,000 to one of these unhosted wallets, the exchange is required to keep a record of the transaction, including the identity of the customer who initiated the payment. So you can imagine here, unhosted wallets could be used for that money laundering because they're anonymous and they're not tied to anyone. The government is trying to change that. Now again, these are rules proposed during the Trump era, but Biden will likely continue with them when he's appointing Yellen, who seems to be against cryptocurrencies. And obviously all this regulation flies in the face of what cryptocurrencies are for in the first place, right? Anonymous transactions, decoupled from the government. But this is the government's MO. They want to control everything. And currency especially, that's a huge power if you could control that. Even more so if you're the reserve currency of the entire world like the US dollar is. Why would you want to give away that power to something you have no control over like Bitcoin? Why does Yellen want anything that she can't use her printer on? And really, in my opinion, this regulation is only the beginning, because I tend to side with what Dalio says about governments wanting full control over crypto and even potentially banning them. He said in an interview a few months ago that if Bitcoin becomes material, governments just won't allow it. He said they'll outlaw it and they'll use whatever teeth they have to enforce that. They would say you can't transact the Bitcoin, you can't have a Bitcoin. And of course the response from most people are going to be like, no, government can't control Bitcoin. Doesn't matter if they like it or not. Well, when it comes to Ray Dalio, you know he has the best macro research in the game, right? Going back over hundreds of years. And he's seen the same thing play out over and over again. It's the rise and fall of empires. And one thing that's happened is that they have banned certain currencies, whether it's gold or a different currency, and they do it all in the name of control. Because here's what happens to every empire. And when I'm talking about empires, I even mean like the US today, or Great Britain, right before the US became the world power. So I mean more world powers than empires, I should say. Well, each world power, what happens eventually is that their economy gets way too filled up with debt. And this is the idea of the long-term debt cycles. And then to get rid of that debt, they don't cut back on spending or anything like that. Instead, because they have control of a currency, they just print more of it. That's what's happening right now, right? And if you print enough dollars, that debt that's denominated in those dollars, the value becomes less and less because each dollar is worth less, right? So eventually you dissolve the debt, but at the same time, you dissolve your currency. And when that happens, then the new world power takes over with their currency. And that's how it's always gone. So tell me, where does a decentralized currency like Bitcoin fit into that? It doesn't fit into that. I mean, it's a brand new paradigm, right? The fact that money could live outside of a government controlling it. But again, government does not want to give up that power. Now we could jump down a rabbit hole too, because we were talking about this last week where about 2% of the accounts that hold Bitcoin hold 95% of the supply. So it's a very lopsided market, and you got to wonder, who are those accounts in the 2%? Is it the American government? Is it the Chinese government? Who knows? That's why you could go down the rabbit hole, and that has a lot of implications. Now, of course, there is one very interesting comparison for Bitcoin and what could happen, and that is gold. Because gold, regardless of the currencies that have come and gone, gold has always remained. So that's why people buy gold now, right? Before there was Bitcoin, gold was the only alternative. But there have been times where the government has banned gold, which is why it's not out of the question for them to ban Bitcoin, and that's kind of what Dalio was referring to. So the question is, does Bitcoin last as long as something like gold, which we seem to have some genetic disposition towards? Because from the beginning of the time, we saw that shiny object and said, hey, that's valuable. It's more than just a social construct at this point. So in our most primitive sense, gold, something shiny that we can carry around. Does Bitcoin, something that's virtual that you can't see, you could have a little USB drive, but it's not the same, it's not shiny. Would it survive getting banned and tossed around like gold did with the government? We're not gonna know until we see this whole thing play out. So then what does this all mean if you're holding cryptocurrencies like Bitcoin? What do you do with your money? Well, if you're a long-term holder, then you don't really care. You expected there to be fights and regulation like this and all these problems, but you believed that Bitcoin and cryptocurrencies would prevail. That's why you're a long-term holder. You knew all of this was coming. But if you're shorter term, then there's some ways to play this. If we take a look at the chart of Bitcoin here, the last time we talked about it, I said that it was compressing into this pattern. And we also talked about how with markets, they're all about compression and expansion. That's how they move. Compress a bit, then expand, then compress again and expand. But that expansion can either be higher or lower. And here I was betting that it would be higher, but turns out it was lower. It broke out of this pattern, this compression, this consolidation, and it fell lower. And this kind of coincides with Yellen's comments too. So what does that mean? Well, I'm still long-term bullish on Bitcoin, at least for the next few years. You've seen so many institutions adopted at this point that is completely different from 2017, where it's a bunch of people just speculating and the price going all over the place. Now you got real players saying, yes, we're going to use this currency seriously. So I think it's going to go much, much higher from here. Now, do I know whether it's going to survive the government trying to regulate it? Of course not. No, we can't know that. But that doesn't mean it can't go to 100,000 before something happens. So in my opinion, when I look at this trend, it's just not over. Even though this broke down to the downside, this might mean that we find some longer term consolidation at this level, meaning we won't resume this crazy trend that we just had. But we got to see it play out. As a shorter term investor, you could see Bitcoin really responds to moving averages. Because it's a newer market, technical analysis works even better. You can see how many times it's went down and touched that moving average and bounced back up. And right now it's heading back to that moving average. So this is a point where you could actually add to your Bitcoin position. And what you would expect is that, okay, it might hang around here or go sideways, but overall in time it should rebound. And when it rebounds, it should resume its trend higher. And the real point where you could say it's resuming its trend is when it breaks its recent highs. Until then, you could see it go up and down like this. And that's the kind of long-term consolidation we could see. And when I say long-term, I don't know how long-term. Maybe a few months? Probably not. The time where you got to get worried and start managing your risk is if it breaks this 50-day moving average. That's just a good support and risk point where you could say, okay, maybe I need to be out of this for now. I'll get back in when the thing resumes. And here's the thing, Bitcoin is so volatile, right? It could correct 50% from here and it wouldn't be a big deal. You could see it already corrected as much as 40% from recent highs. And then it recovered and now it's falling again. So this is extremely volatile. And that's the game you're playing if you're playing short term in Bitcoin. So you can make a lot of money on the upside, but you can lose a lot quickly too, which a lot of people just experienced. So at the end of the day, it comes down to your strategy, but of course we got to keep an eye on this government and the developments because it does directly affect this stock price. And what's crazy is while the government is stepping in on these crypto markets, and more than stepping in, they're stepping on, they're also breaking the stock market right now too. And we made this video right here explaining it. They are screwing up stocks right now, so you'll definitely want to see what's going on and what to do about it. So go to this video right here and I will see you there.